Hey, what is up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be covering 6 areas of our portfolio update, what I bought week 12 of 2026. Number 1, we're going to go ahead and go over a quick market update, taking a look at the indexes, how they performed this week, some of the news highlights that came out this week. Number 2, the weekly income. We had thousands of dollars of dividends rolling into the account. We're going to go ahead and cover what ETFs paid us out and what we're going to be doing with those dividends going forward. Number 3, week 12 buys or sells that we performed this week. Right now, this week was pretty volatile. We'll go ahead and cover what we purchased this week. And then that will lead up into number 4, the stock journal update in terms of what stocks I bought at what position versus what price they're at now. Am I up or am I down? And then we'll take the shares that we accumulated from that and we'll update our dividend portfolio, showcase the updated income going forward per month going forward and for the year, showcasing we did have a substantial jump this week in amount of shares that we purchased. So we'll go ahead and cover all of that. And then number 6, we'll be finishing off with the big wins and plans that we performed this week, some updates that I posted in Discord. So with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, hit that subscribe button, smash that thumbs up. It lets YouTube and myself know that the content is awesome and points it out to the algorithm. If you guys are interested in following along on the journey, definitely subscribe, hit the bell to be notified every time we release a brand new video. With that said, check out the pinned comment down below, free Discord link there, and let's get into number 1, the market update. So this week was a doozy right off the bat. Monday, Tuesday, we can see the S&P 500 along with the other indexes essentially kind of popped up on the week. Friday, they had closed, below some of their support or really close to some of their support there on the S&P and the NASDAQ. Monday over the weekend, there was some news that we were winning. We had won, and then the market kind of stabilized throughout that area. We were all waiting for the Fed. Fed came out, they decided to go ahead and keep interest rates steady at 3.5 to 3.75. Jerome Powell was a bit hawkish, a bit more hawkish than anticipated, and inflation forecast went up to 2.7 from 2.4, showcasing that yes, we're going to be having a bit more inflation, and they're only expected to have one rate cut at the very end of 2026 versus the potential 2 that were some planning. Jerome Powell also kind of came out very cautious about the geopolitical development going on overseas that has been escalating day after day, week after week, as more things are getting shut down, squeezed, blown up. Oil has touched $120 a barrel. Stagflation, fears, and interest rates are curving up at a 4.4, causing tech to be dragged down. Some of the main things here this week that had taken place, right, was Qatar getting hit by, overseas, and then Iran followed up behind. There was $20 billion worth of losses. The facility that was just built 2 years ago for around $26 billion. It's the single largest natural gas supply, makes up 20% of the world's global supply, and it's going to take roughly 3 to 5 years to rebuild. So right now, people are thinking that the market is just going to slowly, bottom out. We're going to find some support, and then we're going to bounce back to these highs. That's not something that's going to happen here in the short term. There's much more volatility out there, and looking at the way that things are escalating, we haven't fully estimated just how much what's going on overseas will actually affect the market and supply of not only oil or helium, but how that affects other areas of the market. And right now we have just broken below that 200-day moving average. Let's go ahead and pop up over here into Y chart so we can see the S&P 500 closed on Friday at 648, below that 200-day moving average of 660. The NASDAQ also fell below that 200-day moving average and closing at 582 versus that 200 at 592. Same thing with the Dow Jones again, right? Everything is just kind of falling and closing underneath here at 455. 465 was that 200-day. The only thing out there right now that is above its 200-day moving average is IWM at 242. The 200-day is at 241 and 22 cents. So we'll see how this week performs. But here, as things are going into the weekend, we saw that There was a missile shot and took out some really close to someone's nuclear facility that wasn't supposed to be having one or hasn't said that they publicly announced it. So there's things that are going to continue to get escalated throughout the week. And despite people saying, oh, we're winding down, it's going to be winding down. You can say that you're going to be winding down, but that's only on one end, right? So one person can say one thing, but the other person doesn't have to agree or wind down. They could escalate it because it has been started, right? So I think we're just at the beginning of the tipping cycle, and things will just kind of begin to escalate versus come to an agreement, right? Because people were already coming to an agreement beforehand, before things escalated, and instead of just waiting it out, just giving it some time, they chose to take actions to escalate it on their own, regardless of whether there was something like was imminent threat versus just a potential threat. So tomatoes, right? Some things I did want to point out here was that, yes, the market does fall down to the 200-day moving average sometimes, and it kind of bounces a couple times and then recovers. But there are instances here where it just has a bit of a dip. Yeah, see, this 200-day break right here didn't quite break, but this one broke and then recovered. Versus, I think what we're going into here in 2026 is more of what took place back in 2022. This all took place around oil as well, but nothing in the type that we're looking at today, where infrastructure is being destroyed. It's going to take 20 some billion dollars to recreate. It is going to take 3 to 5 years to rebuild. There's going to be some more pressure, I believe, here to the downside. So I am looking for a bounce in the upcoming days or weeks, or we'll be using that to a bit of an advantage before there's more escalation there, because I do believe we're going to see something very similar to what took place in 2022. That's just the way that I'm looking at it here. In terms of the spider end ETFs here, we saw that the energy sector up 2.81. Finance is right behind it. Financial, they had taken a beating last week. They were actually the most beat down ETF last week, XLF. They're actually the second positive one this week at 1.23%. So financials are kind of bottoming out from what we've seen, and they are up 1.23. Everything else is in the red, with the most red down here in the orange, and that would be the utility sector, right? Those, the natural gases, oils, anything that relies on that, down 4.07% on the week. Followed right behind by the consumable staples. If we take a look at the S&P 500 heat map here, this is the 1 week performance. You can see consumer defensive very much in the green. There's no really safe spot out there. Walmart was down 6%, Costco 3.5%, Coca-Cola, Procter & Gamble, Pepsi, all 3 to 6%. Utilities down here, very, very bright red down in here. You can see big losses there in the utilities. The only thing, as we saw, financials are doing very decent after they've been beat up here on the week. And oil and Exxon and Chevron, I'm actually surprised to see those positive this week. I know Exxon Mobil has a lot of investments going on over where the attacks had recently got hit here in Qatar. So I'm surprised to see them so positive. But let's go ahead and move on to number 2. A little bit more cheerful note there. We have the week 12 weekly incomes. Let's go ahead and jump into our income side. Now, we received 4 dividend payouts this past week, which was really, really nice. Received a couple thousand. We'll go ahead and start off with TDAX. Started on the 18th of March. This is Wednesday. We had our X dividend that happened on Monday, Tuesday. We were paid out based on our share count of 3,850 times the current dividend. There, you can always go to their website over at tapalphafunds.com and get the current dividend amount that was paid out, 0.35372. We punched that in there, and we should have received $1,361.82, which is what, that's exactly where we got smack dabbed in the middle. Next up was BTCI, based on our share count of 280 shares times that dividend of 0.78040. Again, you can head over to the neosfunds.com, type in BTCI there. You're going to go ahead and pull this information. I like to go through here every single time that I get paid out and get the current amount of dividend that I get paid out. That way I can go into my transaction log, and on the date I will put on how many shares I own on that specific date and how much I receive per share. That way I can kind of keep track as I'm building up shares in that position and the dividend, I can kind of look at the history of it and see, am I going down in dividend? Is it going up in dividend? Am I going up in share count or down in share count, right? But either way, we punched it in there. We received $218.51. Next up, we had two additional payouts. IWMI, this is the NEOS Russell 2000 High Income Fund. We have 2,086 shares of this one. They paid out 0.571 times 2,086 shares is 1,191.11. So in this case, we had 0.106, but they rounded up, kind of made up for the prior ones. And then the last and final dividend that we received this week was from IAUI. That is the NEOS Gold High Income Covered Call ETF based on the 262 shares that we had here. 0.61290. Now this one did come down a bit, not that bad. It is greater than back in January, less than February, so we're still averaging right around that 0.61, but 0.6129 is where we are here in March. We received $160.58, so they rounded it up right there. Now, the only one here that I saw come down a bit, I believe, was the Russell 2000, the IWMI. Came down from 0.6, averaging the last 2 months to 0.57. BTCI actually increased a little bit from 0.76 to 0.78. The top alpha remained kind of the same at 0.35. And that has been the last, since February, came down to 0.35. January is 0.37. Market's pulling back a little bit, so we'll see how it'll perform in the future, right? That's why you guys are here watching the video. Subscribe. Definitely stay tuned for future content because we're going to continue to be dollar cost averaging, picking up more shares in, coming out of this on top. Okay, so that is the income that we received. And what do we do with the income? Really quick recap, right? We have dividends that are getting paid out into the account. Plus, we have miscellaneous income from my affiliates, YouTube, referrals, and such that gets rolled in along with the dividends into my brokerage account. Every single day, we have daily expenses. I load that up on my current Fidelity cashback card, but we'll go ahead and do an update on that here towards the end. That all goes into our brokerage account. And then we use the capital in our brokerage account to pay down the credit card at the end of the month. We pay down our mortgage on a monthly basis, and we pay down our one car loan that my wife has that we're paying down every single month. Any excess gets reinvested back into the account, looking for appreciating ETFs that have a high yield with no NAV erosion. Right now, market is coming down, so we are going to have some negative loss in the portfolio, especially if you're buying holding. So that is to be expected in these kinds of circumstances. So all we're going to do is look at it and be like, hey, I was happy buying it back in the past. I'm happy buying it right now as we're getting a bit of a discount versus where it was at prior, right? That's kind of how it works. Now, let's go ahead and go into number 3, our buys or sells this week. Number 3. So this week, early on Wednesday, so anything prior to Wednesday, I was waiting for what the Fed was going to say. I wasn't sure what was going to happen. I saw this big old jump here on Monday and Tuesday, and I thought to myself, you know what? I'm going to wait to see what exactly is going to happen this week because I think we're in for a doozy. And hey, guess what? I was right. So on March 18th, this was on Wednesday, I went ahead and picked up 7 shares, right? The market hadn't really fallen a whole lot. I picked up 7 shares of TDAC, 7 shares of TSPY. So I purchased these here at $24.35 and $23.82. So $24.35. So right in this time frame right through here, market kind of came out. I believe the Fed had made their announcement already. Market began to kind of pull back. I went and just picked up 7 shares. The full effect of the news kind of began to come out here more on Thursday, or it went ex-dividend. I think it was on Thursday. And that's why the gap down kind of took place a bit more here. And then we received those dividends on, that's kind of what took place there here. And then TSPY, if we pop over to TSPY, same thing happened here, 23.82, 23.82. So right in this area right through here, we picked up 7 shares of TSPY. And I just wanted to wait. Are we going to go much lower, or we're going to do a little bit of a bounce here? I don't want to, during these very volatile times, if I exit, and then try and get back in. We could have some really good news that could pop it up, and I just kind of miss out on the upside. I'm not looking for that at the moment. I'm really just kind of buying and holding through the volatile stuff. I did do an injection. So as the market did fall throughout the week into Friday, I looked at the market where we are from top to bottom. I think we'll just look at SPY, and we'll look at from top to bottom where we are at. Oh boy, let's go back 1 month. Is that the top? No, not quite the top. Right up here is the top. So SPY right now is down from top to bottom. Let's go look 48, right around there. We're down over 7% from all-time highs to where we're currently at here on SPY. So we're down 7% on SPY from top to bottom. On the NASDAQ here, we are down 8.5% from highs to where we are closed on Friday. So I was like, okay, we haven't quite hit some extremes, but hey, anything over 5% to 10%, I'll go ahead and do a injection. So I went ahead and injected $1,000 into the portfolio. This is cash from our savings. We just moved it into the individual account, and I went ahead and split it up between 2 injections. I went ahead and put $494.13 into T-SPY, buying up 21 shares at $23.53. So T-SPY, $23.53. So right on through here, we can see it found some area right on through here towards the end of the day. And I went ahead and just kind of bought $23.53. I made a purchase. It did sell off towards the end of the day. That's okay. So I just did a $500 injection-ish into T-SPY. And then same thing in the TDAC at $502.74. You know, without $1,000 I just injected. So we picked it up at $23.94. So let's head over to TDAC. $23.94. 23. Oh, this one actually got, oh, it's in this area. Okay, so yeah, it's up in this area right here before it trailed off into the end of the day. So right towards here, I thought, you know, hey, look, it's got a little bit of a buy. I'm actually buying it cheaper than I did in the previous day. And I went ahead and injected right there at $23.94. It did trail down into the end of day. We'll see how it opens up on Monday. But yeah, there we go. We bought 21 additional shares of both T-SPY and TDAC. So that was a bigger injection right there. Obviously, if the market continues to sell off into next week, we'll maybe do another $1,000 injection. But we'll see. We'll see how it goes. Maybe I'll wait between that 10 to 15% down versus trying to inject it, you know, more in this range, but we'll see. So that was number 3. Let's go ahead and go into number 4, our stock journal update. So going into number 4, stock journal update, week 12, we had 4 occurrences this week, and this was just 2 buys of TDEC, as we kind of said. We purchased those first 7 shares at $24.35. Since we picked up those shares at $24.35, the market has fallen to $23.77 close on Friday. So as of our purchase, we're down 2.41%. And then on the other buy, 7 shares of T-SPY, we picked them up at $23.82. Current price is $23.32. So we're down 2.12% on those buys. But yeah, you can see massive dips back here through here. Then on Friday, right? Friday, we did a bigger injection. That was that $1,000 split. So 21 shares in the TDAC. We purchased it at $23.94. It did close at $23.77. We are down 0.71% on that buy. And then T-SPY, we picked up again 21 shares at $23.53. On those shares, we're down 0.9%, which is interesting. I didn't think it'd be down that far. You know, we bought kind of midday and then it sold off into the end of the day. But yeah, still a bit of a sell-off there, down 0.9% on those specific buys. But it's still a lot cheaper than anything that I've purchased in the past, right? Back through here, I'm getting a much bigger difference through on here. Now, going back to some things here that I was kind of looking at here, I sold out of my Meta and moved into Microsoft a while back, right through here in February. The Meta position, had I not sold, would be down 18.07, 18.11, versus my current Microsoft shares are down 10.25 and 9.91. So I've retained some value by moving from Meta into Microsoft. But right now, Meta is trading at $593.66. I am very, thinking at the moment that I kind of want to liquidate my Microsoft. Yes, I'll be taking a loss, but I won't be taking a big of a loss as if I had just kind of held on to my Meta position. My original Meta purchase was back at 608 and 610. So what I'm thinking here is I will liquidate the current equity out of my Microsoft positions and move it into Meta at 593 or in this range. I'm buying cheaper than I did in the past, and then I will just kind of hold those long term. Right now, Meta has fallen because they got rid of the metaverse. They're behind on some of their AI, but long term, they're still going to be great. Let's go back and go into our week 12 dividend portfolio and income update. So let's go ahead and head over here. Now, I squished together my T-SPY and my TDAC purchases. So I bought 7 shares on Wednesday and 21 shares on Friday. So that increased my TDAC position. I had 3,850 shares of TDAC. I added 28 new shares this week. That brought my total shares of TDAC to 3,878 shares. My past income was at 1440 and some change. It is now at 1450 and some change. That means that this week alone, I increased my monthly income going forward by roughly $10.47. Our old prior monthly income was 4,331. It went up to 4,342. And you can see the yearly difference there. On a yearly difference, right? You multiply that $10.47 going forward, that's going to add a yearly income difference of $125.70. So in the week, just by purchasing additional shares of TDAC, I increased my future yearly income. I gave myself a raise of $125.70. Now, T-SPY, we can see T-SPY here, 4,041.57 shares of T-SPY. We added 28 new shares of T-SPY. That brought up our total share to 4,068.57 shares. Our old income was 1,221. It went up to 1,230. That was a difference of $8.46 per month. So on a monthly basis going forward, by the purchases of T-SPY and TDAC, that will be an increase on a monthly basis of anywhere around $18.94. And then that brought up our yearly income now here to $52,432.80. And that is roughly a $101.57 difference for the year. So just in this week alone, by investing a little over $1,000 into the market, we increase our yearly income there for the year by $227.27. So we injected some capital into the market and increase our yearly income by $227.27. So I will say that is a win. Now, we did increase our shares through here as well, and that is all showcasing here. And I also keep track of the dividends I receive. So for example, I received $218.51 from BTCI. So you can see here, I've increased the received dividends that I got paid this week from BTCI, IAUI, IWMI, and TDAC. I increased all their dividends, and based on the dividends that they paid out, my real gain and loss is lower, but in reality, it's down around 8.4%. And we're buying back more shares with capital that we're receiving from dividends. We're just buying back more shares. We have lowered our cost basis on T-SPY. So actually, I don't know if I did that on here. Our average cost basis went down from $25.84 to $25.83. Not a big difference there. And on TDAC, it went from 20. That's not right. Oh yeah, it is. Nope. We'll look at the screenshot here in just a minute. But yeah, we are down a substantial amount, but everybody else in the market's down as well. If we take a look at the screenshot, I went ahead and grabbed from Fidelity. Last week versus this week, we can see that gold was positive last week by 7.38% versus this week on Friday, gold is down 4.54%. I'm down $678, so that is a bit of a difference. You would think in these kind of times that with volatility and oil spiking and global uncertainty that gold and silver would do well. Well, that's not the case. Gold kind of fell off there a bit as well. We did go further into the red. We were down 28,000 last week. We're down 37,000 going into this week. I do want to be very transparent with what is going on in the market and what can take place in anyone's portfolio. But this right here is just a smidge of what we were down back in 2025. Going through market volatility back in February to April 2025. Remember looking at my portfolio, I was down upwards of $80,000-$90,000 at the time. And since that point, we were getting injections to the market and we were buying back more shares and we recovered it all. With time, it recovered back to the upside. I added additional capital while it was down and we were back to flat. And then we transferred over to Fidelity, right? Fidelity, I transferred here, I think maybe around, I'm not sure. I'd have to go back and look at the history, but we're still further ahead than we were at in 2025 versus where we're at now. So I'm not too worried about all the red. It's just a visual thing, right? It's not something long term that's going to be there. Give it some time, whether it's 6 months, a year, 2 years from now, these numbers will look positive. Right now, it's hard to look at your screen and see red, but it's okay. From last week, we went from negative 8.23 to down 10.97. And yeah, Friday was a bit of a brutal day. Our loss on a single day was 4,580. So that was a big one right there. But guess what's continuing to climb? Our share count. You can see here the difference on TDAC went from 3850 to 3878. And T-SPY, our share count went from 4,000 to 4,028. So I like to see that my shares are going up. And also you can see here our average cost basis. So TDAC was at 2686. It is now at 2683. T-SPY was at 2579. It is now at 2570. Not a big deal, but it's fine. 2683. 2683 is the new difference there. So that's going to adjust a little bit of things. Not a big deal. Not a huge adjustment. That is number 5. Okay. Last and final thing here is number 6, our big wins and plans going forward. So very quickly, our big wins this week on the 18th. So that was Wednesday. I went ahead and updated my home and auto insurance. I went from Geico. I was paying $1,472 for my insurance with Geico. I went ahead and swapped over to Allstate. Same exact coverage. I think I have more coverage on my home and some better numbers there in terms of what they actually cover. But I basically chopped my cost by half. So instead of $1,472 for my premium, I pay $720.99 for my premium. Same exact coverage, if not more, but less expensive. So we take that $751 and penny difference that I shaved off the total price. And that averages out to about $62.58 cheaper per month that my mortgage should come down. And I use Policy Genius for that. If you guys are interested in checking it out, I do have a link down in the pinned comment. And then I included some screenshots there as well. The secondary update this week was that I signed up for Robinhood Gold. I did get the Robinhood Gold card. I'm currently in the process of swapping all my fixed expenses from my Fidelity 2% cashback card over to my Robinhood 3% cashback card. Now, I haven't received the card in the mail yet, but I do have the card and all that on my phone, and I have wrote all the other information down. But the differences here, so on average, we spend roughly $2,000 on our credit card per month. $2,000 spent is 2% cash. 2% cashback card is roughly $40 a month times 12. That is $480 of cashback yearly. Now, if we spend that same amount, $2,000 spent at a 3% cashback card, that is now $60. Multiply that by 12, that is going to be $720. So without doing any sort of difference there, all we're doing is swapping the card from a 2% to a 3%. That's a difference of $240. And there are months that I'm hoping I won't spend $2,000. There may be some months that I spend more than $2,000. So that's why I went ahead and just do an average. But either way, it is going to come out as a solid win for moving over from the Fidelity card to the Robinhood card. And another thing that I plan to do here, guys, is I plan to migrate from Fidelity over to Robinhood. This is something that I'm going to be doing here within the next week. They have something that is going to be expiring on the 25th of March. So within just a few days, right now they're offering up to 3% bonuses on account transfers. So right now you have an uncapped 2% bonus on transfers to self-directed joint and individual taxable accounts with gold, or 3% when your transfers includes a margin balance of $10,000 or more. So what I'm going to be doing here is I want to start a margin balance of $10,000 or more. Since we're buying the dip, I have $10,000 or more on savings in another account, and I can probably create that if I want on my Fidelity account. But either way, it's going to get made here within the next week. We're going to have that initiate a transfer. We should get a 3% bonus on top of our, I don't know what our portfolio value is at now, right? Our portfolio value right now is $310,212. If you increase that by 3%, so plus 3%, that's going to be $9,306 that we should receive on the transfers. So if we do go ahead and initiate a transfer, we should get a bonus of roughly $9,000 of cash value from transferring from Fidelity over to Robinhood, along with the Robinhood Gold Card, the interest rate that we're receiving inside of the individual account, and some other bonuses that I'm looking at as well. We should be winning, in the long term. We'll have more capital that we can invest during this downturn, taking advantage of this. We'll also be taking advantage of moving from the 2 to 3% cashback card. So, and in the future, I want to continue to update my other insurances, away from USAA. So we're going to continue working on updating my rental insurances. Right now I have landlord policies on a couple of my rentals, and those are with USAA, and they're fairly expensive and a little bit over the estimated rebuild cost. So I'm looking at bringing those down and shaving off half of what I currently pay on those premiums, and then my mortgage should come down on those. And any excess amount of capital that I have in savings from paying down the mortgages on that side, that'll begin to be funneled more into my individual account here in Robinhood in the future. But that is all in the upcoming weeks going forward. So we're still doing a ton of things on a weekly basis that are either creating additional capital or saving additional capital, but it's all towards a goal of saving, investing, and generating more capital, right? So that is going to be it for today's video. Again, if you guys did enjoy the content, I know it was a bit winded. Hopefully it wasn't too long, but in the future, I will be breaking these up into shorter, smaller videos right after I do the specific event. That way there's more content during the week versus all smashed into one video at the very end of the week. And that is it. Thank you all guys for tuning in. Be sure to go down below, subscribe, and stay tuned for future content if you guys are interested in this, and also smash that thumbs up. Okay, that is it from me. I will catch you guys in the next one. Bye-bye.